Great. We are back. Business Monday, Navigant Credit Union Broadcast Center, and appreciate the sponsorship of Deepwater Wind. We have Skyping into us the grand poobah of radio analysts, the publisher of Talkers Magazine, Mr. Harrison. How are you, sir?
I'm fine. The grand poobah, huh?
Yes, that is your new title, accordingly. So
Right.
the radio industry is in a bunch of hurt right at the moment from a financial standpoint. Last week, Cumulus Media, which in this market is the biggest of the boys, and controls 5 of the stations, got delisted by NASDAQ and is now, what some call a penny stock. The stock is trading today at 16 cents. A fraction of what it was a year ago and a real fraction of what it was a year before that. And then IHeart, the largest radio group in the country, who's saddled with $20+ billion in debt, stock collapsed today and lost more than a third of its value and is now in and around 55, 60 cents. What's going on in your industry, sir?
Well, it's not my industry. And I say that in jest. Radio's been in a world of financial hurt for a long time, and now it's just starting to come to the surface in terms of the word bankruptcy, the word stocks crashing, and all of this pain that you're describing. So there's nothing new going on. It's just that maybe now we're going to see something hit the fan, so to speak,
right.
And maybe some action. As far as these, some people ask me, are the stations going to close up? Are they going to go out of business? Is it the end of radio? And the answer is most certainly not.
Right.
These stations will continue. The business structure will change, and who knows, maybe from a consumer standpoint, from a listener standpoint, and just from the standpoint of radio as an institution in American media, maybe it'll be good for there to be this reshuffling. But it's very depressing. It's very, very difficult for the people that work in the radio stations and work for these groups to go day to day without any kind of stability or certainty as to where they stand within their corporate structures. As far as stockholders are concerned, they've already been, down this road.
Yeah.
There's nothing new. As far as the investors are concerned, they've got themselves a huge problem. And the managers of these big companies, the people that have been running them from the very top, devote 100% of their time to debt management as opposed to the business of broadcasting. And that I find very unfortunate.
Let's break these down a little bit. Let's talk Cumulus first. Cumulus, as I mentioned, in this market, WPRO FM, Light 105, Hot 106, these are big radio stations. The cluster here represents more than 50% of the listening audience. And some of the stories you hear out of the building is that, there's no maintenance of equipment. Employees are forced to bring in their own headsets and things like this. That's not helping them produce a good product. And I'd say for the most part, that cluster has always been, it's been live and local on WPRO AM from morning till night. It's had some great talent. It has a great legacy. But this is tough times to what they're producing.
It is tough, and the little things like having to bring in your own headphones and cutbacks, on postage stamps and coffee in the commissary. These are things that are morale killers. I have to say that the people that work in radio today are there because they love it. Salaries are lower than they've ever been. It's not a lucrative business anymore. There are still some people making a lot of money. And ironically, and here's the part that's so important, they're still a good business.
Right.
These stations are capable of making money and having audiences.
Right.
The problem is the debt that was accrued in the process of consolidation since deregulation, which is now years, and the whole 21st century has been a case of radio dealing with the debt that had accrued at a time when radio stations were a hot Wall Street commodity.
Right.
and bank money was easy to get, and the prices went up. And there was a lot of ego at play as well. Radio operators and radio broadcasters have a passion for radio, and I have to say, one of the things I learn as I get older and wiser is that ego and emotion and foolhardiness operates at the highest levels of business and government, which is unfortunate because a lot of very bad decisions are made that way.
What's the pathway for Cumulus? The stock is, virtually worthless. It's an amazing situation. You look at their stock price and value. There's a company that's doing $1 billion a year in sales, and they have a market cap value of about $4.5 million. I mean, it might be one of the most extremes in the history of American business. Similarly, iHeart has a stock in the 50-60 cent range, and they're doing, I think, about twice that amount. I mean, these are mammoth companies, but really unable to salvage themselves within these existing structures. Do they need to collapse? Do they need to sell some assets off?
They need to restructure. They need to have bankruptcy judges and courts be merciful.
Yeah.
They need not to fall into disarray where they have hostile takeovers and all kinds of skullduggery behind the scenes among the board and the stockholders.
Sure.
And they need to be able to have some type of faith from their investors. And it has to be a perfect, lining of the moon and the stars for them to get through this unscathed. Cumulus defaulted last month on a $23 million payment, and it looks like they're not going to make it again. If they don't make this payment, that could trigger bankruptcy this week for Cumulus. There's a very good chance they'll go into it. Mary Berner, the CEO, is a bankruptcy expert. She was brought in at Reader's Digest to do that there. So there's always been the feeling when she took over in place of Lou Dickey that she was on a bankruptcy mission, and it looks like that prophecy is coming true.
Could Lou Dickey, he's raised $200 million in capital, sitting down there in Atlanta, is he poised to jump in and potentially make a move to recapture his company?
There is that possibility. There are rumors to that effect. None of it is official, obviously.
Yeah, right. You're not breaking news here right now.
Lou Dickey took over Citadel
right.
In a hostile takeover from Fareed Suleiman a number of years ago, which led to Cumulus being the gigantic company that it was. It was once a smaller, modest-sized family business,
right.
And he built it into that. So it's not beyond Lou Dickey's ability, and Lou Dickey is still kind of popular in some investment Wall Street circles. And he could play the card that Mary Berner did not perform the turnaround that she promised, did not change the culture of the company as was thrown around in terms of conversation, that it was a toxic environment and all that. And he could very well wind up coming back and taking over the company again. It's in the cards. It's a possibility. Will it happen? I don't know. Beats me. It's hard for anybody, as you pointed out. These numbers are so extraordinarily unprecedented in terms of such large companies with so much not only business but cultural importance operating on the thinnest of ice. Anything could happen. Mary Berner obviously would like to stay in charge. If she has a pre-pack, I understand, and is going to be presenting it this week. It all depends on the judge. And it all depends on what happens in terms of the board and whether Lou Dickey is successful with a takeover, if in fact that's what he wants to do, which, based on history, is very likely.
So, switch over to iHeart. Bob Pittman, who was sort of storied media CEO, built MTV into the megalopolis, to the height of its success, came over to resurrect iHeart, changed the name of it, created this concert structure, created this very sophisticated app that allows you to tap into any number of different music stations around the country, build playlists, and compete against Pandora, but it hasn't worked. And the $20+ billion in debt, a lot of it held by Bain Capital just up the street, up in Boston, has made the operation very, very difficult, and probably more so than Cumulus, they've cut programming to be much less local. In this market, they have virtually no local broadcasting and hosting. Certainly on the AM station, I think they only have one time block. Everything else is syndicated. What's the future for iHeart?
Well, iHeart and Pittman, of course, resurrected what was called Clear Channel by changing the name and turning it into a multi-platform entertainment company. He actually did a pretty good job of it. The problem is that the debt was accrued for radio stations.
Right.
Radio stations are a very different asset than concerts in Las Vegas, or taking all of your stations, standardizing them, and turning them into basically one big national online radio station.
Right.
They could have had iHeart Media Online doesn't need to have local brick and mortar license stick assets. So that you know, $220 billion, $20 billion in debt. It sounds like a nation.
Right.
How do you sell radio advertising to possibly service that kind of a debt? From what I understand, his relationship and the management of iHeart, their relationship with their investors is not as let's say it's hostile compared to that of Cumulus. Cumulus's debt is significantly less,
right.
But Cumulus has run out of momentum. iHeart, I mean, Pittman is a magician. What do they call it? Kicking the can down the road. I don't know how he does it. I mean, I don't know. I don't know how they have kept these operations afloat so long. Maybe they're too big to fail. I don't know. But both situations are not equivalent in terms of iHeart's debt is far greater than Cumulus's debt, and they're in deeper trouble. But right now, Cumulus is facing the firing squad, and iHeart. I don't know what today's 35% drop is going to mean tomorrow. It's just happening. It could bounce back, or this could be the new low, and their problems will intensify next week.
Yeah.
As we come to the end of the year, this has been a terrible quarter for radio, for them, for both Cumulus and iHeart, and it hasn't helped their situation.
The early numbers on the digital side off of Friday, off of Black Friday, are spectacular, up 14 to 16%. That's a black mark, I think, for brick and mortar, and also I think for a lot of traditional advertising. That's not a good number for newspaper. There are not a lot of digital companies advertising in newspapers. There are a lot of brick and mortar still trying to get their circular into the Wednesday before Thanksgiving or the Sunday edition. The implications are significant. Before we go, just give your last thoughts on predictions on what we should be looking for over the next couple of weeks for these two mammoth media companies.
Well, first of all, to see whether they survive the year intact with their present management structure. I don't know which way it's going to go, and I don't engage in predictions when I don't have all the facts. Let's just say that particular item will hit the fan, and we'll know what happens.
Yeah.
After that, in the new year, we might see the selling off of assets. I see no other way.
Yeah.
They deny it because they're operating these stations, and they don't want people who work at these stations to feel that it's time to give up. So the word is always, don't worry, everything's going to be okay. This is exaggerated. But I think that we'll see a selling off of assets. We'll see new companies coming along. But as for the internal structures, they're going to change. But who's going to be left without a chair in the game of musical chairs has yet to be seen.
Great last word. Thank you so much. As always, you are always the most knowledgeable man in this world relative to the developments in this sphere. Thanks so much, and hope you had a great Thanksgiving, and hopefully we can talk again soon. Thanks so much.
Josh, thank you. Thank you very much.
Okay, we're going to take a quick break, and we'll have Mr. Innovation, Saul Kaplan, lots of news on the innovation side.